Well, welcome everybody. It is the US Payrolls. It is March 8th. Now again, the reason it's March 8th is because when the first Friday of the month falls on the 1st, they don't have the report ready yet, so it gets kicked back to the 8th. All right, let's take a look at what we're in store for. So we do have both the US report coming out and the Canadian report. So if we look at the US report, the US report is right around 200,000 jobs. It's been like this for the last couple of months, and every single time the US Payrolls Report blows it out of the water. As you can see, last month it was 353,000 jobs were created. I expect this to be another strong beat. Who knows how much it's going to beat it? Well, look, we don't know it's going to beat it, but if we go in the past, this report has been a lot better than expected. We also have the Canadian change. I'm not really looking at playing this Canadian number. I'm definitely looking at playing the US number. I'm going to go through this pretty quick because I want to get into the analysis, but you guys know you can enter before, you can enter on, and you can enter after. You get to choose which one. You get to draw up your playbook. Very rarely do I enter before. I'm actually going to be entering before on this one here. So I'm going to take a small position with a very, very wide stop, and I'm going to be adding to that position if it goes our way. One of the biggest risks is slippage. So if you enter before the announcement, you could easily be stopped out. So if you put a stop in at 183.10, you may not get filled until it goes up substantially. We also could get what's called whipsaw price action, where if you go long or short, everyone gets stopped out. So it's really dangerous trading before these news events because you get these huge moves that could slip orders, you could get whipsawed. We really have to be on our toes here. The safest way, as always, to play news events is with the second stage entry, where you wait for that initial crazy move to happen and then you enter after, and it's much more like a normal trade with just maybe a little bit more volatility. Entering before and on the news, that's where all of the risk is. Let's take a look at where the market is right now and what is happening. I'm going to pull up a trading view real quick. And I want to show you, well, if you can just look at this, the dollar pairs. So I've got this top area here, the dollar pairs, they're all down substantially. I really want to focus on the US dollar because that is what I'm going to be playing here. And you can see that it has been very, very weak the last couple of days. Let me go to a daily chart. The last couple of days, very, very weak. We're down here at this support line. You either get to choose whether you're going to be long or short dollar. That's really it. So the question is, do we want to be long or short dollar? Charting wise, everything's telling you to be short. All the momentum is to the downside. All the momentum is to the downside. And if this were just a regular trade, we would be saying, hey, you want to wait for a bounce or a rally to get in short again. You don't want to get in here. It's too overextended. We want a rally or a base to get into. Whenever I'm trading news, I look at everything as a probability and a risk to reward. Looking at this situation, saying, okay, where is the biggest risk? Where's the biggest reward? If I take a position short, what's my potential upside? What's my potential downside? If I take a position long, what's my potential upside versus my potential downside? I'm looking at this situation right here, right now. We've had a big fall. We're all the way down to this support level. To me, I'm looking at this saying, I think there's more potential on the long side of the dollar. Really, the only reason is if we do get a stronger than expected report, we could easily have a significant bounce back higher. Now remember, I'm not looking to play this for multiple days. I'm looking to play this for today and today only. I'm going to exit this trade before the end of the day. So I don't need a lot of time on this. I'm not looking to, hold this and add to it over days or weeks. This to me is going to be a one-day trade. And when I look at it, it's clearly there's more potential of a reversal than there be going higher. So the big question is, what do I play it against? I like it against the yen. The reason is, think about it. If the report is better than expected, it means there's a stronger than expected economy. That actually is a risk on move. So I actually think the yen is going to have the worst reaction to this. I'm going to be looking to play dollar yen. What I'm going to do is I'm going to take a position before. Now my desired position is going to be 300,000. My first position is going to be 100,000. So when I take a look, sorry, I don't have enough time to go through all the math of this trade, but we pull up dollar yen here. We're going to say, okay, where is the next support line? This one's a little too close. So I'm looking all the way down here at 144.57. I want to make sure that that's where my stop is. I'm going to move this one down here. If I was taking a regular trade, a regular position, below this last support would be my stop, which is 145.90. 145.90, which is 120 pips away. So I want to be close to 360 pips away. Again, if I'm taking a third of the position, that means I triple the amount of stop that I would have. So as you can see, this is a very, very liberal stop. This is a stop that is very highly unlikely to get triggered by any sort of quick action, any sort of whipsaw. If I'm all the way down here, so if we take where this is, I'm down at 145.50. So again, if I was looking to do a 120 pip stop, now I'm looking to do a 360 pip stop with a third of it the position. Hopefully everyone gets that math. I don't have time to go through it. We end up right down here at the support line where we want it to be. This is a mile away. This is highly unlikely this is going to get triggered today. So what I'm going to do is I'm going to enter a third of the position before, and then I'll take a third of a position after that, and then I'll take a third of a position after that if it's working for me. If it's not working for me, I'll stay with my original position until I get a profit. So that is what I'm going to do. And I cannot add to it until I have a profit on the trade. I will not add to it as a loser. I will add to it when I have a profit on the trade. That is the rule for this, and then I will be moving up that stop and then exiting by the end of the day. So hopefully I covered that. It's one of these situations where I don't have a ton of time, but yeah, there we go. I have a question about dollar Swiss franc. Dollar Swiss franc is a great pair too. Great pair you can use as well. I'm using yen just because I think it's going to be a little bit more sensitive to a better than expected report. That's why I'm using the dollar here. So dollar yen, like I said, my position I would usually take would be 300K. So I'm going to take 100K here. And I'm going to enter this. I very rarely do before the announcement entries, but I'm taking this. It's already down 0.7%, 100 pips for the day. To me, this is going to be just fine. And I'm going to attach my stop. And this stop was going to be at 143.50. That is, again, a mile away. There's almost no chance that this order is actually going to get triggered on that initial whipsaw. I'm just going to enter at the market. I got no problem entering at the market because that's where the market is here. What I like to do now is I like to get my next orders ready. So my next order is going to be to add my second third of the order. And this one is going to be my third. So I like to get these orders ready because I do like to trade off the chart at Interactive Brokers. And what I mean by that is I like to pull up a chart, and you can see I've got orders out here. I've got orders out here ready to go. I've got two of them where these lines are. I can just drag these orders right here. I can just drag them wherever I want and make them go active. So I'm just simply waiting here. Like I said, I will not add to this trade unless there is a profit. Unless there's a profit, I will not add to the trade. After that, again, everything needs to be predetermined. After that, I am going to be using an hourly chart, and I'm going to be using the parabolic SAR. So this parabolic SAR right up here, these dots here, once it gets above these dots, I'm going to start to use these dots as my trailing stop. So you can see where it is right now. The stock or the currency is at 147.06. We've got to get up above 148. So this has to have a pretty significant move for it to get above that. And then at that point, I will be using a trailing stop on the parabolic SAR following this up. All right, we've got the report. Looks like the report is to the upside. So this is where I need to now take a look at it and say, okay, I want to add my second half. Where do I want to add it? And this is where you pick a point on a chart. I like to let this first candle go for a little bit and establish a high. Sorry, everything is smushed down because, that stop there so wide is making our candles or our chart a little smushed down. All right, while we are waiting here, let's take a look at what the actual news was. Not that it matters. I've learned that it doesn't matter what the news was. All that matters is what is the reaction to the news. All right, the initial news is 275,000 new jobs created. The unemployment rate did go up, which is, again, bearish for the dollar, 3.9%, and wages went down. Instead of 0.2, let me just pull this in so everyone can see it. Instead of 0.2 expected, we only got 0.1. Looking at the Canadian report was much better than expected. Okay, so the initial move was higher on the dollar. As you can see, the dollar is now moving down. Remember, this is where you must follow rules in trading at all times. My rule was I will not add to this trade unless it is a winner. At this point, it is not a winner. It is negative. It is down about 35 pips from where I entered with a third of a position. I will not, absolutely will not enter. As a younger trader, I would sit there and justify, well, if I get in here, I'm lowering my cost basis. I would find all the reasons in the world to change my predetermined outcome. Sometimes it worked, sometimes it didn't, but over 100 trades, it definitely worked against me. I no longer have any compulsion whatsoever to deviate from this. So it's just what it is. The trade is not going our way. So at this point, I am going to not add to it until it goes positive. And in fact, I'm going to use this point right here on this chart. Again, sorry it swished down, but that is because that stop is stretching this out. I'm going to go to the top of this candle, which is 147.51. I'm going to go ahead and make my second order active right at this point. This way, I don't need to sit here. I don't need to watch. It's not going to be good for me to sit here and watch because this is where you start to talk yourself into things. But I'm going to go ahead and make that second order active. That's sitting out there now. If it can go higher than it did before the first candle, then I'm going to go ahead and enter. Again, the order sitting right there, this green line right here. If it goes above that, I will enter my second order, and then what I'll do is I will then tighten my stop up to the correct position based on math. So basically, 120 pips was the initial stop we were doing, times that by 360. We'll just take 120 pips off that and go to the correct stop. But like I said, this trade is going to be a one-day trade for me, which means that I will be out of it by the end of the day. These stops are so wide and so liberal, very unlikely that they're going to get hit. But as you can see, if it starts to move the way that I thought it was going to, I'm going to take the next position at 147.51. And after that, and if I wanted to, I could predetermine the next point that I took that. I'm not going to do that yet, but I could if I wanted to. I could just predetermine that, and then I could hit the submit button for a buy stop. And then I could go have my day and just have alerts set on my phone that if I do get triggered on one of those, I could just jump on my phone. I could move up the stop very quickly on your mobile device and just go about the day just like a normal day, except we have a trade going. All right, are there any questions at all about this trade? I'm going to say I do this type of trade a few times a year where I get into something before an announcement and try to catch the move. The reason I did that is because we've been so far down that I knew that if we got any move up, it was likely to be a relief rally and probably didn't have a second or third wave behind it. So this is the only way to capture those kind of relief rallies. If something's very extended and you're doing a counter trend trade, really the only way to catch these is to get in before. But to get in before, you've got to scale in your position, scale it down, have a very, very liberal stop to where you don't get hit with the whipsaw. You know, anything close to where the price is just too dangerous. All right, any questions? You guys want to take a look at any other pairs? Let's take a look at dollar yen. While we were talking about, sorry, not dollar yen, but dollar Swiss franc. Likely has the same pattern as the yen, and sure enough, yeah, but again, this is what I'm talking about. See this whipsaw? This whipsaw is very, very dangerous. All the way up to 87.81, all the way down to 87.30. If you're playing anywhere in here with stops, you were stopped out with a loss, long or short. It doesn't matter. These are the dangerous moments with these. Dollar yen didn't have as big of one. It's because it's got a little bit more liquidity. But if you take a look at something that had, less liquidity, like Kiwi dollar, look at the size of this whipsaw. So we got all the way up here to 62.13, all the way down here to 61.70. That is 50 pips. That is a 0.8% swing. So that is almost a 1% swing. This will absolutely crush an amateur trader when they're looking to trade this because they got stopped out of loss. Nothing happened. All that happened was the whipsaw, the volatility, and they're out. They're out, and really, you can see there is a slight move happening, but nothing super substantial. Nothing really big. So the dollar basket was down 0.79%, and now the dollar basket is down. So sorry, it's lost a little bit, but not all that much. All right, so we've got that second order sitting out there at 147.50 basically is where it is. It's sitting right here above this little top here. If it gets to that point, very happy to enter a second leg and see if it can extend it. But regardless, this trade will be cut by the end of the day. All right, if there's any more questions, let me know. Let's just check out CAD. Let's see how CAD is doing here off this news. Let me look at the basket. The CAD basket is down, so the CAD is also reacting negatively to this news. Even though it was a better than expected report, still trading down. This is where, again, the number doesn't matter. It's the reaction to the number. That's what matters. We're seeing some continued sell-off in the dollar. And look at this. We've got some big moves happening, reversals in the equity markets. So equities like this number quite a bit. This is why they liked it. Good jobs growth, but all of the inflation stuff attached to it was weaker than expected. So more jobs with weaker than expected inflation aspects of it Yeah, the equity market is going to like this. I would be very surprised if the equity market closes negative today. This is a good report for equities. Hey, thanks for joining me, everyone. Everyone take care. Goodbye.